Yo, how we doing?
Yo, how's it going, Chris? How's everyone doing?
Good. You all right?
Yeah, no, I'm good. Question
Good.
is, are you all right? How's your weekend?
I'm good as gold. I got back at 8 o'clock yesterday, which is all right. So we left Glastonbury at about 5 o'clock. Went to see Shania Twain, and then we left Glastonbury about 5 o'clock. And yeah, got home about 8 o'clock, which is great. So I had a full night's sleep on a proper bed, which makes all the difference. Oh. Camping's great. I love camping. I really enjoy it, but you just don't get the quality of sleep that you're used to.
Yeah, no, so sleep is underrated, to be fair.
Yeah.
It's all about vibing and having fun.
Yeah, it was a great weekend. Lots of music, lots of food. The food was amazing this year. Really, really good food.
What do they normally serve?
Say again?
What do they normally serve?
It's like all kind of lots of different places. And I think if you go for like the normal bog standard like burgers and chips and stuff, you're gonna get bog standard food. But we went for like little boutique places. We went to this really nice like Thai restaurant. It's like a street food place, and like a Louisiana Cajun barbecue yesterday. Oh, it was amazing, like prawns and chicken, and oh yeah, so good.
Oh my
Sunday night, the weather was out. It was sunny. Yeah, it was beautiful. Really good weekend. Did you watch any of it?
No, I didn't actually. I didn't. Probably heard it in the background or in the gym something. I don't know.
Check out Coldplay if you get a chance. Check out Coldplay. Amazing. Best live performance I've ever seen. Yeah, it was amazing.
No, they're legends, ain't they? It's got
it's really good. Really good.
Sure.
How was your weekend?
My weekend today, it's quite just very basic, just family, gym, and journaling. A bit boring.
That's good. Yeah, good. Putting that work in. I've missed it. Like having 5 days off. Like I kept in contact with my students, which is good. And you know, I kind of kept an eye on the charts. I did a little bit of trading, but I didn't have my computer, so it was difficult to trade. Like I hate trading when I've just got my phone. Like I manage my phone. I manage a lot off my phone, but I make sure every morning I sit down and I do my analysis properly on my computer. Because I find that when I don't, it always messes up my trades.
100%. Same here. I just use my phone to close trades, to be fair, or manage it, but to actually enter a trade and do analysis, I don't know who does that. I don't know. Good luck if you do, man. But that's difficult. He's in the building today. We've got Mr. Martin. Hey, Martin, how you doing? If you're still watching. We've got Anthony. Hey, Anthony. Paul. And Mr. Lawrence, lovely. But there's 23 of you. That's the thing. So we need to have more engagement. Come on, guys, man. Say hi. Hi.
Love it. Lawrence is back as well. Lawrence is like our regular now, isn't he?
Oh yeah, he's a legend, man. He's been a regular for years, to be fair. Since I was doing live streams like 2 years ago.
No way.
Always showing up, but now he's killing it. And it's just about showing up.
Yeah.
Even if regardless if you're profitable or not, even if you're consistent, it's all about just showing up.
100%.
Lawrence is that guy. He just shows up, and he's trading at skyrocket. I can see in his analysis. I'm
really?
Lawrence, I know.
Love it.
For sure. Okay, cool. Let's do some trade recaps. Have you?
Yeah. How was your week last week?
It was actually really good, to be fair.
Yeah.
It could have been a lot better. So I've entered on. I've got two different accounts, right? On the conservative one, the main account, the long-term sort of track record, that I'm down to 0.8R. So that was just my week, to be fair. On my other account, I hit home at 4.3R. Could have been 10R, but don't really care. It is what it is. So that was my week in a nutshell. And obviously it was £1, the one I was emphasizing last week.
Yeah.
Have to get in, and I got in. And
nice.
Last week I also emphasized to get in on a second opportunity just a little bit higher in the event that it doesn't drop and it reverses just a little bit higher. Guess what? I missed it, unfortunately. Bloody came at 7 in the morning, and one of my traders managed to catch it. He's up like 4R or whatever. But I ended up missing it. But it's a good lesson for me, because obviously they've changed the whole system. So now I think Mondays are going to be my favorite days of the week.
Really?
Tuesdays and Fridays, but now it's probably going to be Mondays and Fridays now, to be fair. So yeah, Mondays you're going to get good sales, guys.
I was going to say, was that why there's such a big move on the dollar this morning?
Yeah. Remember, they've changed the settlement system, right? It used to be 2 days after the transactions go through and all that nonsense, but now it's just 1 day. So it all gets finalized, and the liquidity is ready basically today. That's why there's a lot of volume. Normally Mondays are boring, choppy,
Yeah.
but that was ages ago. That was literally from May. It's changed now. So if you guys ain't aware of it, it's a good time to just look at the markets on a Monday. They're going to be really volatile moving forward.
Good to know. Good to know. Hey, Joseph, how you doing? Good to see you. Have you got some of these trades to go through today? You can show us.
Yeah. Let's crack on.
I can go through mine if you want a little bit of time. Mine are ready to go.
Yeah. You can go.
Yeah, I should jump on. I'll just share my screen, guys. So, where are we? Share the screen. So yeah, so again, relatively decent week. I feel like when I don't have huge weeks, it's a difficult one, isn't it? It's one that really kind of messes with your head a little bit, because when I don't have really good weeks, I get almost frustrated. So I came out last week all in all with, I think, about 3R, 4R in the end. So about a couple of percent, which in the grand scheme of things, we're pretty happy with. And what I was looking for, where were we? So we did this on, so that's Tuesday, Wednesday. Yeah, so Monday we were here, about lunchtime we were here, weren't we? So my loose plan was that we were either going to, because that wasn't liquidity by that point, we were either going to come up from here and take out this external liquidity to drop back down, okay? Or take out some of this liquidity. We had a nice daily low here, we had a nice daily low here. And as you can see, we were here on Monday, price kind of meandered around here, and then we had this nice, really big drop. One of the things I need to get better with definitely is taking these Asian range plays, because one of the things that I don't like doing is, every time the Asian range, that little orange section here, you see that clearly enough, that one. That little orange section there, okay, that's the Asian range. And one of my favorite trades that I love to take is the Asian range sweep, because it gives you really good setups. I like to combine it with other things. I like to combine it with, major liquidity points, external liquidity points, like, if that Asian liquidity had swept that would have been absolutely perfect. But one of the things I've noticed is that actually, and something I need to do a bit more testing on, if I just took the Asian range sweeps on their own, they're about 60% profitable, which when you can catch 2 or 3R off them is pretty good. The problem is that you often get these false moves where you have the initial move like that, and then it comes back and takes your stop out. But that's like anything really, isn't it? So at the moment, I trade it in a very selective way, where I'm kind of taking it as and when, rather than when lots of criteria met. But something I need to do a bit more testing on, because I do keep missing moves like this. That was a huge move. I could have placed a safe stop above that liquidity to the left and ridden that all the way down there. There'd be an easy 7R. Even if I got in late, that'd have been 4R down to there over a couple of days. So I'm going to start doing a little bit more testing on that, because it is one of my favorite setups. But I want to test on, if you just took every single one, what would the outcome ultimately be? Mm-hmm. The trades I actually took last week were, I took one on Wednesday, I think, Tuesday, Wednesday. So yeah, Wednesday. So a nice simple New York Open trap. So one of the things that I teach in my mentorship is this, which is a move which happens on the New York Open pretty much every single day. So let me just hide this so I can show you. So most days when New York opens, it leaves behind an area of imbalance. It creates like this false move where this liquidity comes into the marketplace, and then it will push in one direction. So I start measuring this. This is what this green tool is here. I start measuring this from, it's 8 to 9, I think there's a New York time. So for me, it's from 1 a.m. to 2 p.m. And in there, what I'm looking for is on the 1 minute or the 3 minute chart, I'm looking for clear and significant area of imbalance that's been left behind, like a supply zone or demand zone, as you might call them if you're a supply demand trader. So we can see here, this whole area, I did just frame it up to that candle, but you can see this whole area here has left behind an imbalance, and it's created this move down here. Now, what is really common for this area to happen is that it often gets swept. So for me, what I'm looking for is, I'm looking for this trap to be created, it to sweep out some form of liquidity, which it did here. It took out both of these daily lows, which is that daily low and that daily low. And long story short, I just jump in on it. Okay, I look for some bearish price action, which we had here. Okay, I'm looking for, breaks of structure. Doesn't necessarily have to be previous structure. It needs to just show me that there's momentum in the marketplace. I need to see there's imbalances coming into the market. I need to see that there's, a clear continuation in price. And look, obviously it could have come up to this high here and, swept me out, but it didn't. It took us out. And as you can see, pretty perfectly, it came up, it swept the trap and, took me out of the trade. For break even down here. So, I was pretty happy with that. I got 2R out of that trade, and we're good to go. Then from there, it was really just a case of, we spoke about last week about AMD, the power of 3 and, accumulation, manipulation, distribution. So once I knew that this is kind of our cumulative phase on the Monday, we then had this nice move down, which manipulated these daily lows. That was my manipulation phase. So I can mark it on for you. So I've got my accumulation here. I've got my manipulation down here. I was pretty set on the fact that we were probably going to be pushed higher. However, coming into Thursday, I did take the Asian play, as you can see. So we had the Asian play, took out previous liquidity here to the left. We had a nice setup here. This is my perfect setup. This is my kind of key go-to setup here. So raid on liquidity, impulse, manipulation, and then a push down. Again, I got a couple of R out of this one before I got taken out for break even. I did take a second entry here, which admittedly was a bit of a risk entry. I see that now in hindsight. I could have had a better setup here. Again, what I saw is liquidity being taken. What I should have probably done on this one, being perfectly honest with you, is waited for some better structure to come in. So waited for a move like that. That's what I probably should have done on that one. I got a little bit impulsive here. So that ended up being a loss. I think I shortened my stop to about here. So I took about a half loss on that one. Which is a frustrating one, but I look back on it and I can see a few mistakes there, which is fine. We're going to make those mistakes from time to time. So that was my Thursday, and for me, this is my turning point. So this is my structure that I'm within. Okay, I haven't really had a clear break of structure. I've raided Asia's liquidity. I've raided a previous day's liquidity, and I've created a bearish setup. So for me, that trade was absolutely golden. What actually happened though is we pushed quite clearly bullish. So for us now, we're in a position where we're looking at thinking, do you know what? We've now got, a very clear and obvious breaker structure. Okay, so what I would call a true breaker structure. And, this is giving me clear indication that we're going to be pushing higher. The last trade, I'm frustrated to say, the last trade of the week, I took out about here. So you can see in this little section here, there's loads of noise. So what I was looking at is what do we have on Friday? We had some sort of news. Was it CPO on Friday?
No, this week it's NFP. I think last week it was CPI.
Last week, yeah, I think it was one of the CPIs on Friday. It wasn't a particularly it wasn't one that moves particularly fast. I think it was CPI, but that particularly, I don't understand them fully, if I'm honest. I just look at them as kind of how much they're going to move. But it was the CPI that doesn't cause that much. Not the main CPI, basically.
Yeah, something like that.
That's it. Yeah, something like that. Okay, so I saw this move here. Again, we had some nice structure. And I'll be honest with you, it was Friday afternoon. I was sat in a big field watching, I can't remember who, watching someone live on stage, and I was like, I don't want to be managing a trade or out about, trading's great, we all love trading, but there's a time and a place for it. So I was in a small profit around here. I closed it. I was comfortable with that. Frustratingly, it did run perfectly to target this morning, so we had this big gap. This could be to do with those contract changes that you mentioned, Diego.
Yeah. Mondays now.
We had this big gap here, and then we took out that liquidity, and I'm not really sure what price is doing now, but it's not somewhere that I'd probably be getting in for a sell on. I've left Mondays out of my trading for a very long time now. So for me, it's something that I'll need to do some testing on, and it's probably going to take a little while to get that data before I start confidently trading Mondays, but I'll definitely be having a look at them going forward. But, as you can see, my week was pretty much perfect. We had our accumulation on kind of Monday, Tuesday, manipulation, which then reversed on Wednesday afternoon. So the manipulation of the week, or the low of the week, or the high of the week will normally happen around Tuesday or Wednesday lunchtime. And then we had a distribution for the rest of the week and coming into this week. So it was a really, really lovely week. It played out really, really nicely. Kind of weekly cycle played out really, really nice. Lovely. If I'd held that, would have got a nice 5R out of it. But like I said, life's for living at the end of the day. We can trade any day. And, I wanted to enjoy my weekend. So I closed that down. It was a small profit. We ended up overall about I think 2 or 3 are in profit for the week, which, you know, it's not the end of the world. A couple of percent up, 1.5%. Not too bad.
Okay. Not too bad, man. Smashed it. Well done.
Yeah, that's it. So yeah, that was my week.
Well, you know, you're watching some live performances and you're taking home some decent wristables, you know.
I think I had a few vodkas in me by that point as well, so I was like, I'm probably not going to make the right decisions here, so I'm going to just close the trade.
Yeah. That's enough. Cool. Has anyone got any questions for Chris before I move on?
Lawrence going short of you. So
yeah, dollar strength. Agree with that. 100% and 50%.
So you're in this short. You're in this short here, are you, Lawrence? Coming down here, filling that.
Yeah.
Nice. Just taking some profit out already. Yeah, I mean, look, that gap. Look, it's a logical place to go, especially with gaps, because as we know, gaps do like to be filled. You know, they're the ultimate imbalance, really, aren't they? Gaps. Yeah. You know, that is a clear liquidity void. So yeah, it makes sense that that be filled. You know, we are corrective as well in bearish structure. So, you know, we're correctively moving up. So I think it's probably more likely to move than if this was a bearish gap right now, because obviously the bearish momentum is still quite strong from up here. You know, ultimately, it's, for me, I did look at it this morning, I'll be honest. I was looking at it, and if I'm honest, I was expecting that we could just keep pushing higher. And the price action does indicate that we are probably getting to a point where we're kind of correctively come down. There's a couple of areas. So this gap is definitely an area, Lawrence, that we could be looking at taking a buy from potentially, or at least filling. I think your sell's probably right. We've also got the low of Asia as well, which we can't ignore. So that Asian low is going to be a nice liquidity point. So I think you're probably right. Somewhere down here is probably a good place to target. That would be my next profit if I was in there. In hindsight, looking at that now, yeah, there is a setup there. You did have kind of a change in structure. You could have got involved like on an engulfing pattern down here, stop above the high. For me, though, we spoke about last week about kind of high probability and high potential trade. So whilst that is probably a high probability, see, I wouldn't class that high probability if I'm honest. And I'll tell you why. The range we're looking at for me, so I trade ranges. The range we're looking at for me is a bearish range, okay? We've taken out an internal liquidity point, which was external to this internal structure. This is where it gets confusing. So this is our internal structure, which is here to here, okay? That structure, however, didn't break anything. It swept this low, but for me, that's not a new range. For me, a new range would have to be something like this. Then I've got a new range that I can take a trade from, okay? And I could sell from here and I could buy from here, okay? For me, that little wick down there was just that. It was just literally a liquidity sweep. So that for me doesn't generate new structure. For me to extend this range or to put in a new range, I need clear closes below these levels. You know, I need multiple candles showing me that we've got, you know, a structural change of some kind. Because I didn't get that. That's not a structure change for me, so I'm still within this higher time frame range. That's what I'm looking at. So the reason why I wouldn't love a trade from there, not that it isn't a valid trade and clearly you've made some profit off, which is great, is we've clearly changed bullish. We've got multiple breaks of structure now, okay? We've clearly changed bullish, admittedly internal. So the next logical target is this area here. Either the liquidity area, either the external liquidity at the top, or potentially just somewhere within this premium section where the real value is. The other thing that makes me nervous about selling from here is because we are mid-table. So anywhere in this section here, that's like the equilibrium of the range. That's where you get lots of kind of price meandering about, not really doing anything. There's no kind of decision. Buyers aren't really in control. Sellers aren't really in control. So I wouldn't be surprised, Lawrence, if price kind of just mucked about here for a little bit. It might even just really correctively move up until we get like a news move or something like that. We've also got NFP this week as well. So it might just be a slow week. And the fact that it's in this position, just kind of forecasting here at the same time, it wouldn't surprise me. I probably would only be looking at buys for now. I'd be buying from up here, buying from down here somewhere. If I look now at my new ranges that have been created, get rid of some of this stuff so you can see the charts a little bit easier. If I get rid of some of these ranges that have been created, I'd be looking at this hourly range now. Your sell's probably right from up here, Lawrence, but then I'd be looking for buys anywhere in this discount section. So the gap's probably a nice place to take it from, and if not there, it will be in that bottom 25%. And any one of these kind of liquidity points taken would be, be happy to take it. Initially, I was looking at buys from here because we had such a confident close above that external or external level. We had a really confident close above that. So I was actually looking at buys from up here because we're in an internal range. We're bullish. There's lots of factors going on in my head, but we didn't quite get the setup ultimately, so I didn't take it. So, for me now, it's just a case of watching and waiting, sitting on my hands. But I think you're right. That gap is probably a good place to be filled, and we can just see what price does from there, really, can't we?
Lovely, lovely. Look, Lawrence, fair enough, it fits. Well, you're saying it fits his plan, so you might as well take it. What made you enter it, Lawrence? Curious to know. What made you enter it?
He took his profit out at the end of the day as well, so he was happy, right? Got your first target out. You're good to go now.
Relax now, for sure.
That's it. Also, wait for Lawrence. Do we want to have a look at your charts, Diego?
Yeah. Let's do this. Where are we at now? Okay, I'm going to go over the loss real quick. Dollar CAD. I'll share my screen in a minute.
Did you just trade? Was it Euro GBP last week? Was that the one you were setting up?
No, I traded dollar CAD and Euro pound last week on two separate accounts.
Yeah.
Yeah, so that was more or less my game plan. I mean, with dollar CAD, at the time of this analysis, if we go back to last week Monday, what was it? 12, around 12-ish. There we go.
Yeah.
I was expecting this, right? A liquidity grab of the pattern, Elliott Wave 5, and also the liquidity grab of these obvious equal lows. And yeah, basically a stop one. I was looking to catch that trade.
Yeah.
Now the forecast was correct. I mean, the forecast, to be fair, we can both get a forecast 100% accuracy in terms of direction. That's so easy, right? But to get to that level, it does take a long time. Actual trading, different ball game. As you can see, I ended up taking a 0.8R negative.
Yeah.
So I came out a little bit earlier.
Yeah.
And the reason I came out was actually at this point in this particular candle, somewhere here. And the reason I came out is the trades that I take based on my data and experience, they should really go into profit quite immediately. Right?
Yeah.
That's just one of the characteristics. So whenever they start hovering around and I see bearish candles that just come out, and lo and behold, I would have taken a full loss.
Yeah.
So that was the reason, for the loss. If I just quickly zoom out for you guys, just to give you a sort of larger perspective. This bullish wedge, I'm expecting a pretty hefty reversal from it, which has obviously, it's basically active now.
Yeah.
If we go on to the M15, what do we have it? It was just a little bit messy. I mean, I got triggered in. Another reason why I came out a little bit earlier is because of the equal lows that it formed. It was just a messy trade, right? I ended up coming out a little bit early, approximately around there. So that was a fair loss. It was just a boomerang, a fake out of Elliott Wave 5, a stop hunt of an old London Asia session of this major liquidity grab, etc.
Mm-hmm.
Interesting that it went all the way and grabbed the liquidity of Asia.
Yeah.
But that's going to be too far away from the boomerang. That's an invalid area for me. So for me, it's just a fair loss. There was obviously some price action on the lower time frames for the actual entry on a break and retest of structure. So that was a loss.
Yeah.
I'll take that one on the chin. My best lesson that I learned from it is something that I knew already. As traders, you're going to learn a lesson more than once, right? Yeah. Even if you know what the lesson is, and even if you see something that tells you should not take the trade, you're going to take it anyway, right? But I'm not saying all the time, I'm just saying sometimes you take a loss and you learn a certain lesson like 10, 20, 50 times until you never ever take it. It's just part of the journey.
Yeah,
right?
agreed.
It's just one of those things. So everything at the time ticked my checklist. And my main sort of lesson was when I got triggered in here on this particular candlestick, the one we see right now, I should have just cancelled the limit order because of the equal lows that I've formed before. I normally get involved. My entries are normally like this, right? I get involved on that first sniper, or I get involved on the second one and I engineer the equal lows. Normally those are my entries. There's one of the two. But the fact that I kind of broke my own rule when I entered over here, obviously that's on me. So this is one of those things. So yeah, that was the reason for my loss. But it's good to learn a loss more than once, to be fair. It's just good to do that. Gives you that discipline.
Also, you've got to remember there's so many variables when we're trading. There's so many variables. It's like the perfect trader. I've got a trader in my group at the moment, and he's looking for the most perfect setups all the time, and he's just not trading enough. He's taking like 2 or 3 trades a month and not having the best results with them. And I think something that trading at the end of the day in its purest form is gambling. Okay, we are using patterns and experience and analysis to predict where the market is likely to go, but we don't know it's going to go there. We just have an assumption from our experience that it might. So there is an element of risk to this, and it is important to understand that every now and again, as long as you're not making stupid mistakes, like I don't look at that and think you've made a stupid play there. I think yes, there was one of the things I think we have to be better at as traders is not over analyzing our losses either, because there were some equal lows there, but let's say you hadn't taken that trade and it had gone exactly in your direction, you'd have been really frustrated if that had happened. So I think you have to have, like, the way I look at it is 3 or 4 non-negotiables. So if I'm talking about a checklist, 3 or 4 absolute bare minimums that you have to have without fail every single trade that you take, and then 1 or 2 what I call Brucey bonuses, where they're like just little sweeteners on top that if we get them, great, but if not, maybe we class this as a B grade trade now because it hasn't got all 6 parts of my checklist. Actually, we B grade trades we've worked out are 50% strike rate, and therefore they don't win as much, but they still win. So I think you can be overanalyzing. I don't think you took a bad trade there. I think there could have been those no equal lows there, but like you said, you often get in when they're just created anyway, right?
Yeah, exactly. It's definitely a fair loss. And I was so conscious and aware of the situation. I almost talked myself out of it. I said to myself, okay, this is ticking all the boxes, but there is equal lows. Should I just hold it, Diego? And I said to myself, you know what? I'm pretty sure all the other confluences are going to outweigh the equal lows.
Sure.
It didn't, but a lot of the times it actually has.
Yeah.
But we're playing the numbers game.
Yeah, exactly.
I have a pretty decent risk reward on average, so a loss is just a loss. But anyway, that was dollar CAD. The other one was euro pound. This was entered on a separate account, which is a little bit annoying, but it is what it is. Where we are. No, this one out. So that was a trade that we planned last week on euro pound, and this was last Monday, approximately 11-12. I was expecting again, I'm doing the same thing, right? 1, 2, 3, 4, 5 above liquidity, and my entry was obviously just above. That was a pretty decent trade. Ended up hitting my take profit. Did go a little bit lower, but I did have a second plan. And my second plan, which I'm pretty sure if you guys rewatch the live stream, just so you can, use these live streams as education as well, not just to, scavenge for trades, right? Just use it for educational purposes, and rewatch the live stream, because I did say there's a good chance I may have to update the Elliott waves and also fill in the gap. Well, you can't really see it in this broker, but there was a bit of a big gap here, and there is a liquidity. Let me just show you. So on a broker like FXCM or the other brokers, there is a massive gap. I'm just showing you a different chart, right? So that particular gap and the liquidity just above here was a good reason as to why price may not go to my main target. And if I zoom out, my main target is essentially the top of this trend line, to be fair, right? Obviously, well, normally I bank 80% and I leave the rest running, but I wanted to just bank 100% of the time. So whatever I bank 80%, the remaining 20%, I can hold it. But this week, I just wanted to bank, to be fair. But anyway, second trade, now that there is a large wick and there's an update of the pattern, it may go, to my point of interest. You see, yeah, it's climbing up. There is a move to the upside. Gonna update the Elliott waves as well. To the new one, there we go. And now we've got a new Elliott wave 5. And essentially, yeah, the trade was actually going to be here. One of my traders managed to catch this one. We zoom into the M15, base of a point of interest over here on the left with an indicator. 2 pips for the spread, 2 pips for the stop loss. The actual entry, I'm expecting it to be here, but I didn't really go there. Would have triggered me in, but I missed it. I was actually in the gym. So from now on, I'm not going to go gym in the morning on Mondays because you get really, really good setups. For sure, that's one thing I've learned. So yeah, would have been up 4.5R, but it's just a missed trade. And it's just the same thing. I'm going to repeat the process. That was that particular target. The next target for this would be conservatively, potentially this trend line or a previous, daily low or the start of the pattern, depending on the momentum. It might even go higher again, like I did predict over here, and form a new pattern, but this time liquidate this, these significant highs over here. So right now, that's my current game plan, but I've missed this trade, unfortunately. It is what it is. If I zoom out to the H4, there is actually a lot going on, especially on the daily time frame. I'm expecting a massive reversal on Elliott wave 5. So we've got 1, 2, 3, 4, 5. This needs to be updated. Hold on. Oh no, there's a new one. This is the higher time frame. We're currently in Elliott wave 3. Zooming into the H4. Massive bearish engulf from back inside of the pattern. So that's going to be a great trade. It's a shame I'm not really in, but you can see if we update the pattern, it's forming a pretty decent channel with new Elliott waves, as you can see. So 1, 2, currently in 3, potential 4, 1, missed this one. 1, 2, 3, 4, and then 5. But we'll see what happens, to be fair.
And you think that could basically just drop from there all the way down to that 5 point?
Depends. It depends. I mean, it's a scenario, but what I'm personally doing is I'm just in and out, to be fair.
Yeah.
3 to 5 are in and out. And if I have to change my bias, I'll change my bias into maybe a new pattern. Then I might buy it, then I might sell it again. I might buy it again. There might be a new Elliott wave update, then I'll be selling it again. And whenever it takes me towards this trend line, then it takes me towards the trend line. But it's not really there as a sort of mandatory target. It's there as a bit of a guideline. As I'm focusing mainly on this pattern and I'm trading within this sort of range.
Yeah.
So obviously we go on to the H4 or H1 actually. This to me looks pretty clear, to be fair. We have the textbook boomerang outside of Elliott wave 5 and I close back inside, targeting this, and this. That's the current game plan. But obviously if price action says this and there's a boomerang back up to the upside, then I'll change my bias immediately and look for longs. Yeah. That's essentially the way I look at the markets. I don't really have a bias. I do at the time, but I'm very quick to change my bias, to be fair.
Yeah. Is there a way that you can tell the difference between a boomerang, as you call it, and just a continuation or a breakout trade? Because I'll be honest, I would look at that and I think that for me, that's such a big close above your trend line or above your liquidity point. I look at that and think, for me, that would be a sign that actually we're probably going to continue bullish. What is it that indicates to you that a boomerang is a reversal rather than just a close above a certain level to continue on?
So what indicates that it's a reversal from this point of interest and a close back inside here?
Yeah.
It's
You
just
class that as a boomerang because obviously it's come back into the wave, right?
Yeah.
How do you differentiate between a boomerang and a breakout continuation to the bullish side?
It depends on how I can quantify your question. So obviously, because I'm trading patterns and Elliott waves, based on the data that I've gathered, it's pretty consistent that when you see a wedge, you obviously see some Elliott waves, etc. Then whenever price does tend to reverse from here, there's a high probability that there's going to be a drop.
Right. Okay.
So there's a reversal from here. That's as far as I know, right? Okay. What also tends to happen is sometimes this particular boomerang, depending on some other confluences, which I don't really go into in the live streams, then you can anticipate a major reversal. Okay. Right. But what I personally do and what I teach traders is you catch the reversal here, and you just take profit after you know when you see 4R, whether the 4R is here or here. 4R is a bit of the sweet spot, and if we look at this particular pattern, see if there's any sort of reversals somewhere, we might be able to perhaps see one that probably played out here. It's a bit of a little one. That was a major reversal. And, where else can we see one? There's a bit of more of an extended boomerang over here. But in terms of a breakout, and again, I'm trading patterns and Elliott waves. So it's a little bit different to what most traders will see, right? Because a lot of traders, whether you're ICT, SMC or whatever, you'll see this as a breakout, then okay, that's a breakout, and you are correct, right? But I'm trading the patterns and the Elliott waves at the time, right? And we're changing bias pretty quickly. But again, this is a reversal, but the same way that Chris has, like a daily range, saying it's bearish and it's a bearish range, but you can still buy and sell it within that range. I do exactly the same thing, but I do it with patterns, right? So with this particular example, I'll show you what I mean, and we can move into the next subject. Hold on. With this particular example, let me hide this. This is a reversal based off the boomerang, right? But what it's also telling me is that it's also updating and telling us there's a new pattern. And with this new pattern, we have obviously 1, 2, 3, potential 4 somewhere here, and a potential new boomerang. So if I move this out of the way, so we're just constantly trading these patterns and we're updating them real time. That's essentially how it works, if that makes sense.
Makes sense.
Simple. Might be a little bit complex when you try it out yourself, but you just have to work on the pattern recognition and then you'll be good.
So what's your plan for this week then? What are you expecting? Are you still trading these pairs?
To be fair, I haven't really done my full analysis. Because I've missed this trade. One of my traders is actually up like 5R or whatever. I've missed it, so I'm kind of just forgetting about it. But if it does come up here, right, then that would be fantastic. I'll be looking to take out liquidity today, and I'll be looking for a boomerang up here. I managed to catch this trade at the time because I think this trade was it was this boomerang at the time, I believe. Somewhere. That obviously paid out. Now there's a new updated one. So I managed to bank 4.5R. I missed this trade here, fair enough, but I'll be looking to catch this one. I mean, sometimes you get the home runners, but it's not about the home runners, it's about making profit, as you know. So that will be my next game plan, and hopefully if I can update you guys next week, hopefully I catch it. If not, this will probably just drop quite heavily. But anyway, we'll see. Really kind of depends on DXY, to be fair.
Of course.
So what do we have for DXY? Okay, so DXY is bullish. Immediately is bullish. I don't need to investigate any further. So this to me looks bullish, meaning it will probably it's going to push Euro Pound further south. So I'm bullish on the dollar for now.
Nice.
So that's my game plan.
Cool. Right. Well, I think we've got a good topic today to discuss, haven't we? We look forward to this one, to be fair.
Yeah, let's go. I mean, we've only got 17 minutes, so let's make the most of it.
Yeah, we've got plenty of time. We do keep leaving these parts right to the end.
Yeah.
I think we need a bit more time on them. So today we're discussing what matters more. So trading psychology versus mechanical trade management. I've been thinking about this when you were speaking about it for the weekend. I was thinking about this, and it's a really interesting one, isn't it? Because I think they kind of go hand in hand. It's difficult to have one without the other. And we spoke about this the other day, didn't we? About how you kind of get your psychology, as they call it, psychology. I hate using that word. It's, for me, it's a bit of a frustration, because psychology in my head is just experience. That's all it is. Like, if you've got bad psychology, it's because you don't know your system well enough. It's because you haven't done your back testing. It's because you haven't got enough experience trading it, whatever it may be. That part of it, that mental game that people talk about, where you learn how to be a good, stable, confident trader, comes from just working hard. That's all it is. You learn a strategy, you test it forward, you test it back over multiple years, and you build confidence with it. And the people that struggle with their psychology or make loads of mistakes, because you and I still make mistakes, but the people that make loads of mistakes are the traders that don't have enough experience. What they're doing is they are literally gambling. They are guessing, and they're trading where they feel price might go, rather than where they know price is likely to go based upon the testing that they've done previously. So if I was going to pick one of those, which matters more, I think it would be mechanical trading, because mechanical trading, it really takes away the thought process of, should I take this? If you can remove that question from your trading plan or your mindset of, should I take this? You need to know, well, based upon criteria A, B, C, D, E, F, G, yes, I should take this because I've proved in my testing that it's a 60% success rate getting to 2R or 3R or 4R or whatever it may be. So for me, it would definitely be mechanical trading. And then if I got the mechanical side of it right, and I was successfully trading on it, then from there everything else follows suit, right?
Yeah. 100%. Couldn't agree more. To be fair, you can't get psychology without rules, and you can't get rules without a proven strategy.
Yeah, exactly.
I was thinking of showing you guys my stop loss trade management. Not sure about that, but if you would like to know,
yeah, definitely.
Drop a like in the comment box, or actually, you know what? Why don't you guys follow me on Twitter? If I just get 3 to 5 followers, I'll show you the strategy. If not, I mean, you have to kind of work for some value, guys. Come on.
100%.
I'm going to show you a trade management that's, even with bad psychology, will help you out a lot.
Yeah.
So, a couple follows, a couple likes, I'll get started. If not, next week.
Yeah.
Yeah, no, it's just life, isn't it?
Would you say you had a mechanical trade strategy? Would you say your trading is mechanical?
Yeah.
Yeah?
100% now.
Makes it so much easier, doesn't it? It takes so much that fear away from you.
No, it actually does. It actually does, to be fair.
How many followers you on?
Well, nobody's followed me, so nobody's going to get my trade management. So I'll just go on to the subject.
Nobody's going to get it then. Have to wait and see. Wait and see till another time.
Yep. Joseph just done like. Can't really see it.
Nice. Lawrence always followed you. Anthony already knows it.
Okay, I'm going to post it one more time. There's a lot of you viewing. And I'm going to share it anyway, because I'm kind. I'm just kind. Just want to do that, build a bit of FOMO real quick. I'll be really, really quick. So this is just a stop loss management. Everything else, the entries mechanical, the TP is mechanical, the stop loss is mechanical, because without it, it's me, a human, and it's just hard. But when it's mechanical, at least you've got rules, right?
Yeah.
So let me share it. Boom. Okay, let's go to let me see, Euro USD, I wonder. Am I sharing my screen? I'm not.
No, not yet. Not yet. There we go.
Okie dokie. So, first things first. Let's, again, the entry, that's a whole different subject. But let's just pretend and assume we've entered here, right?
Yep.
Cool. And your take profit is all the way to the moon, Hollywood, whatever, who cares? Okay. Forget the take profit. So what I do is I go on the M15 and you want to establish the trend. Right? At the moment, this is the way I view the market, by the way, guys. So if it's different to the way you view the markets, doesn't really matter, does it? So we're entering a buy, but obviously the trend before that was bearish.
Sure.
Right. So what I tend to do is I look at the nearest high, which is here. The reason that's a valid high for me is because there's two counter candles. There's two bullish candles here. So that's a valid high. So I've entered a trade here. Once I've entered a trade here, I don't touch the trade, right? Even if there's, well, I only touch the trade if it's going against me and there's, you know, equal lows or strong bearish candles. That's an exception. But most of the time when I do get triggered in, if there's a range up here, I don't touch it until this high gets taken out. Just to give you an idea, there we go. Okay, so again, okay. So look, that's a liquidity grab. Now for my entries, I'll use that as a breaker structure, but for my trade management is not, right? Okay. I need a strong close above that area. Yeah. Until that breaks, my next course of action, by the way.
Is this before you move your stop loss, do you mean?
This is when I update my stop loss.
Yeah, fine. Okay.
When I update it. So let me see, hold on. Okay. This again is still a liquidity grab.
Yeah.
Oops, still a liquidity grab. Fine. This particular candlestick here, that bullish candle, that's the breaker structure. Okay. So now that we're in an uptrend, what I'll be doing next is I need to look for the nearest two counter candles. Remember, earlier it was bullish.
Yeah.
Now I'm looking for two bearish counter candles.
Okay.
So there's one there, and there's also one there. And there's also, the next one will be right here. Can you see that? The two bearish candles?
Yeah.
Right. I'm not going to count this because it's bearish, bullish, bullish. Right. So I'll count this. So what I'll be doing is my stop loss at the time would be here. And I'm going to update it. Not 2 pips below this low, but 2 pips below the previous low, so the second low.
Okay. Makes sense.
There we go. It's that simple. Let me continue.
You keep doing that. You keep trailing that up, do you?
I keep trailing it up. Obviously, I've got my main take profit. My TP1 is normally at a fixed 4R.
Yeah.
To be fair, sometimes there might be a little bit over, a little bit less. So let me see. My actual TP would be, it will be right here because of this particular high.
Yeah.
We've got a high here. We've got some structure here and a little high there. I'm not going to go for this one because that's only 3.26R.
Yeah.
I'm going to go for this one because it's nearest to my average, which is 4R. And I'm not going to do that one because it's a little bit above. So my TP1, this is where I'll be scaling. But anyway, TPs is something different. So hold on, let me see. So it's broken structure. Now I'm looking for a high to be established. So I need 2 red candles now for a high. Remember, if I'm bullish, I'm looking for 2 counter candles.
Yeah.
So, where do we have it? Nope, there is no counter candle there. Fair enough.
And they have to be 2 in a row.
There have to be 2 in a row at a significant high. So if there's 2 red candles following this particular price action, so let's say this price action or over here, I'm going to ignore that. Has to be at an extreme high.
Okay, and it has to be immediately after 2 individual candles.
2 red candles near the top here.
Yeah.
So, okay, so there's nothing here. Again, ignore the TPs. Who cares about the TPs? I'm waiting for a high to be established. There's still no high. You see how it eliminates psychology because you're just waiting for your rules.
Makes such a difference.
Yeah, you've banked some profit as well, which is great.
You know, and all those little moves that didn't create that 2 bearish candles, people might have been taking their stops up quick or panicking about it going down bearish, and you in the meantime have ended up holding a trade and making a lot more money out of it as a result.
Yeah, because I used to trade my stop loss based of just basic structure, and I just got burned. But obviously, when I found my little niche, I found.
And so when you have those 2 bearish candles, then are you taking the previous low, significant low, that created that move up before the 2 bearish candles? Does that make sense?
For the actual low, I don't know where the low is at. So, for example, you see this low here.
Yeah.
That is not a low for me because I need 2 red candles.
Okay.
This is not a low for me because that's 2 red candles. However, there is a low here for me, right? But I'm still waiting for a high, by the way. So let's just wait. And okay, there we go. So that's a valid high.
Yeah.
Right. Now, because of the wicks, I'm going to go for the extreme high.
Yeah.
As long as the wick to the left. So you see the extreme high from the wick of the red candle.
Yeah.
As long as this area, there's no bodies, it's fine. If there's a wick up here, that's not gonna, I'll be using this particular area as the high, if that makes any sense.
You just use the 15-minute time frame for this, or do you use other time frames?
Just the M15. I've tried every time,
M15.
and this is my little sweet spot. Yeah.
Yeah, fair.
So what I'll be doing now is I'll be waiting for height to break. So let's just wait. Just waiting. Again, you've banked some profit. You've left the trade running. I have not updated it. Remember, my stop loss is still here. I've banked 4R somewhere here, whatever. But this trade here now, this is where traders struggle, right? Seeing all this profit or seeing this pullback, what I see is my high has not been taken out. I don't care if it does this.
Yeah.
Right. So you just eliminate psychology. This is why it's important to have trade management. That's why it's always going to override psychology, in my opinion. But you can't get to that trade management level until you've got the proven data to back it. So like Chris said, it goes kind of hand in hand, to be fair.
Yeah.
So okay, then you just wait. Look, this is just patience. Patience. My stop loss is there, by the way, you know where that blue line is. Patience. Oh, there's a gap. Probably would have hit TP2 or something.
Nice.
But let's see. Hold on. There is a new high up here.
Yeah.
Couple of red candles.
Yeah.
Still have not updated my stop loss, but remember, it's okay because you've banked some profit.
You get a lot of room to breathe then.
Exactly. There's a lot of room to breathe. And there we go. Look, there's a breaker structure.
Yeah.
Not this candle. That would be a liquidity grab for me. So there's nothing here yet. Nothing here yet. Boom. Breaker structure.
Yeah.
Now that there's a breaker structure, then I need to look for my valid low. So where is my valid lows now? Hold on. There is a valid low. Not here because there's blue, red, blue.
Yeah.
There's a couple of red hairs actually, so that's fine. And the next one would be these two over here. These two. I can also see there's a couple of red hairs, red candles there. But now I need to see if there is a 2-pick gap between them, whether I separate the low or not. Is bang on 2 pips. So I'm going to use this as my significant low.
Yeah.
I'm not going to go into too much detail there, but there we go. So that's where my new stop loss is, 2 pips below that particular low, which is approximately right there.
Nice.
Go and then I just repeat the process, and you just keep on going. Now I'm waiting for a high to be made.
And so you've taken out most of your profit by this point, I'm assuming?
I mean, I'm not going to lie, I don't know, because I went to a random day. It really depends if it's at a particular pattern, right?
On that basis, that trade's about 5R. Is that normally where you take most of your profit?
Around 4 or 5R is where I'll bank 80%,
Yeah, fine. Okay. So the rest of this, you're just kind of holding it until it gets to,
basically, until I get taken out, or until it goes to like a significant area where I see a boomerang. I'll look to come out, to be fair.
Sense.
I mean, and then, it just keeps on.
Just keep going.
Keeps on giving, to be fair. Yeah. That's it. Yeah, just a little update on trade management.
Do you think traders can actually trade if we're talking about emotion. Sorry, if we're talking about mechanically, I suppose the opposite must be emotionally. Do you think it's possible for a trader to trade on feel? And I think somewhere in their head they do have strategy, obviously. But do you think that there's room for traders to trade non-mechanically?
Non-mechanically,
Yeah.
As in, yeah, you can, but you need to be really good at your game.
Yeah.
You need to really trust the strategy and have a lot of data.
But then, and you fell right into my trap there, Diego. I'm sorry. I apologize. Then, if you have that data, surely now you're trading mechanically. So I don't think you can you? You can't. Because if you're that good at trading, it means that you're following a set of rules that makes you mechanical, right?
Yes, but I think there's elements to being mechanical. I think there's like 100% mechanical.
Yeah.
And what you've said is you've got data to back it. So that is mechanical. But the data that you've gathered on your journey to gathering that data is a mixture of discretion, I guess.
Yeah, and I think it has to stem from that mechanical background, because again, for you to know that the market's probably going to move in this way, there's going to be some level of rules that you're following, isn't there?
Oh yeah, 100%. There's always going to be rules, 100%.
Yeah.
100%. But for the traders that don't have a 100% mechanical strategy, you're still going to have some data, and you still need to sort of filter out all the different elements of your strategy. That's where it gets a little bit complex.
Yeah, definitely.
You can, but again, it's just going to be a little bit harder. I would definitely suggest whatever your strategy is, if there's any elements of discretion involved, make it mechanical ASAP, which you can.
And I think
go on, sorry.
If you're starting out as a trader and you're learning a strategy, just follow its rules. Because I have this work quite a lot. So I coach people on how to sell, basically sell. I'm a sales coach. And one of the things that I'm often talking about is, if you don't know what you're doing, if you're not as experienced as me or your mentor or whoever it is at doing whatever it is that you're doing, then you're probably better off following what they tell you to do. And I struggle sometimes with my staff when I'm like, look, I appreciate you've tried this thing out, but you're not doing it in the way that I've told you to do it. And I know from my experience that this way is going to work better. When you get to a certain standard, you can build in your own variables if you want. But for now, just do it as I've taught you, because I've been doing this for a long time. And I think if you're following a mentor, and it's a mentor that you can trust, someone who you've got evidence, anecdotal or stats-wise, it doesn't really matter. If you've got experience with this person that you can trust them, you're probably just better off following what they tell you to do. Meaning, if you're following their strategy, just follow the strategy, follow the rules, black and white, consistently, and see where you end up. And if you feel like then after time you're not getting the results that you want, then maybe that's when you start changing things. But I think so many people come into this industry with this almost like a God complex, where they're like, I'm going to change the game. I'm going to be the best at this. I'm going to be better than this person who's been doing it for 5, 6, 7, 8 years. I still have weeks, sometimes months, where I don't make any profit. And yeah, there's some mistakes in there. And if I'd not made those mistakes, I probably would have made profit. But 8 years down the line, I'm still making mistakes, and I'm still learning, and I'm still trading on emotions sometimes, and I'm still being greedy sometimes. It's a multi-million-dollar industry. It's not going to be something you're going to pick up quickly. So I think, a bit of advice I'd give to anyone out there is trust the mentor that you trust. And that's a bit confusing, but if you've got someone that knows their stuff, and is a legit successful trader, then just trust that they probably know better than you and follow their rules.
100%. Yeah, definitely.
I think that's about done for today, isn't it? Any questions for the team before we go, guys?
Yep.
Make sure as well, if you guys aren't following us on Instagram, we'll put our links in the chat today. But my Instagram's at StrongMoneyForex. Pop me a follow. Diego, yours is at smart. Is it the underscore? Oh, yours are confused. It always confuses me.
My Instagram.
_ smart _ wave _ trader, right?
That's it. There we go.
Nailed it.
Not sure if you can even see that. I mean, just shoot me a message on Twitter if you're on Twitter anyway. I've already posted my my link to that. Any other links we can share? Is anyone?
And that goes, you know, I appreciate we've got the Discord channel, but you know, those of you in the Discord channel, you know, it's quite busy in there, and things from time to time might get missed by us. So if you do want to speak to either of us, feel free to reach out to us on our Instagrams. I've put ours in there at Strong Money Forex for me, and then Diogo's going to put his in there as well. So make sure you pop us a follow, pop us some comments, drop us a DM. And, you know, it'd be interesting. It'd be great to you know, hear from you guys throughout the week as well. We're really friendly coaches. We're really, you know, we're here to help you guys. We got into this game, you know, because we like helping people. We like teaching people. So anything you need, feel free to reach out with us. It's not just these Mondays that you can get access to us. If you do need us, reach out to us on our Instagrams. We'll be more than happy to help you.
And that's it, yeah.
That's it. That's us done for the day. So look, we'll see you guys same time next week. This will be uploaded on YouTube. Other thing as well, we've had, you know, quite a bit of growth on our YouTube lately. So if you're not doing this already, please go and pop us a subscribe over on the YouTube as well. It makes a massive, massive difference to us. The growth of the channel, our ability to do this, you know, everything else in between. And, you know, the busier and the bigger this gets, the better it becomes for you guys as well. We want to start bringing on guests and traders. And, you know, we can only do that with your support. So if you're not doing this already, please go and pop us a subscribe on the YouTube channel, follow the Instagram channels, and hopefully catch up with you guys again soon. Cheers.
We got. Take care, everyone.
See you later, guys.